Hey cousins, it's y'all favorite insurance cousin, and let's get into this one right here. This one is term life versus whole life insurance. I totally believe that everyone should have some type of insurance. I'm a strong believer that something is better than nothing, whether you choose term or whole life. Whole life tends to be more expensive in the long run. People say, well, it builds cash value. Whole life does build cash value, but it's not going to build cash value if you put like $10 or $15 in it. That's not gonna give you no $5,000, $10,000 in it. You generally have to be putting, I would normally say that average whole life policy tends to build, you start to really see the cash value after about 5 years. And I would say you need to be paying over $100 to start seeing that. And after 5 years, you still may only have like a couple thousand in there, maybe like three, four, something like that. It just depends. But I would say anything over $100, then you start to see the cash value kick in. But you also don't get as much as face value either in a whole life. In a whole life, if you want something like a $500,000 or $1 million, usually those policies cost more versus on the term life side, you can get more coverage for less money. And most people are looking at what can I afford? What is going to fit in a monthly budget? And usually it's a term life. Now, if you are like, yes, I have to have it as something that I want to do, then I would suggest taking out a larger term life and a smaller whole life, and those are called marrying the policies. So that way you can pretty much have the best of both worlds. But if you're pretty much, I would say, financial strict, and you're just like, look, I'm on this budget, I don't know what's gonna happen. Because what normally happens is that insurance is the first thing that goes when a person's finances go haywire. Insurance is the first thing that they let go because it's not tangible. They'll be like, well, I got to pay all these other bills, and insurance, I don't need that. Why is insurance put on the back burner? I have no clue. That actually should be put before everything else, because what if something happened to you? The insurance is there, but it's usually put on the back burner. So I always tell people that that's what's best. Like, get something that you know you can afford if and when things get strict. Now, on term policies, like I said, you could take out a larger face value, a death benefit for less amount of monthly payments. But there's so many different term policies. You got a 5-year renewable term. Those policies renew every 5 years, and it's based, and once it renews, when that 5 years is up, it's based on what your age is at that time. Then you have some terms term to age 65. So which means that you'll pay, if you're paying $30, you'll pay $30 until you're 65. You have some 20-year terms, you have some 30-year terms, 10-year terms, and then you even have return of premium, which means that you'll pay for it for a certain amount of time, and then what'll happen is you'll get your monies back. Well, on the whole life end, it's still flexible. It's variable whole life based on different variables. And then you have universal whole life. Universal whole life gives you the option of being flexible with your monthly premiums. I don't really care for universal whole lives, and you don't really have a lot of companies or carriers that still do universal, because a universal whole life policy can belly up. So let's just say you got this policy when you 25 and you were paying $50, but you wanted to skip a month, or some months you wanted to double up, you could. But then it got to a certain amount of time to where you really couldn't really pay. Well, you can kind of like skip some payments, because in a whole life policy, what'll happen is if it's any cash value and you start to miss the payments, it can also feed itself off its cash value and try to keep it afloat. But with universal, since the payments are so flexible, what can end up happening is that if you don't pay enough into it, by the time you get a certain age, the policy can be underwater if you don't pay attention. So those are a few things that with the universal life. But for the big picture of it is, yes, with whole life you can get some cash value, but I say that you really don't start seeing a big cash value like increasing unless the monthly premium is over $100 a month. but then you don't necessarily always get a large death benefit. You see what I'm, so it's like, which one? So it all depends on the person's, I would say, the person's situation and what's going on with them. With both policies, you're able to add riders. So if you're like, I have children or I have a spouse or things like that, depending on the carrier, if you can't afford to pay for a family package, if it's like I got me and my children or me and my spouse, some of those policies let you add riders for your children, and then it'll just say children of the insured. Like pretty much if you want to put 20,000, 10,000, if that's your child, then they're covered under your policy. And then once your financial situation got better, then you can pretty much get them another policy. Depending on the carrier, they do have age limits. Some might say until the child is 20, or some might say 15, or not 15, I would say 25 or something like that. But they usually have an age limit on the child, and then you would want to try to get the child that's on the rider their own policy, because you can get a child, a baby, a policy as young as 10 days old. So of course, the younger you are, just the cheaper the policy is, because it's less likely there's any illnesses. But the older you are, that's when those illnesses start to kick in and things like that. So, and you really are like, okay, what am I gonna do? Whole life policies also give you the option to do really, like, it gives you the option to tweak and do some really neat things with them that term life wouldn't necessarily. But for the most part of it, they are pretty much running neck and neck. But for a financial aspect of a monthly premium, term life is going to always be better because it's more affordable than it is for whole life. More people like more death benefit than they do paying out that monthly premium. So like I said, something is always better than nothing. And I would always encourage people to at least get some term. Now you have accidental life is something that, like, the your bank or your credit union might offer you, things like that. They offer you accidental. Just be mindful with that. That's accidental. So that means that you would have to die due to an accident. It would have to be deemed an accident for that policy to pay out. So that's usually what an accidental policy is. So you will just be better off just getting a term, because then you're covering all bases when it comes to those type of policies. But once again, like I tell you guys, never take price over coverage, because it'll fail you every time. And your cousin Quan will see y'all in the next video. Bye-bye, cousins.